I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level. And that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way. And then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, and that seems like a deal again, then that's where you really see it take off, Alan. I believe that, I've been saying $180,000 in the fall of 2025 for a while now.
As Bitcoin is on the brink of surpassing $100,000, James Lavish warns that this milestone is the final barrier before an earth-shattering explosion. If you thought the bull run was losing steam, think again. This is just the beginning of an unstoppable surge. In an electrifying interview with Bitcoin magazine, Lavish dropped a bombshell prediction. Bitcoin isn't just going up, it's about to skyrocket. He believes that once Bitcoin crosses the $100,000 psychological barrier, it will trigger an unstoppable chain reaction leading to historic highs. Institutional investors are flooding in, retail FOMO is building, and liquidity is primed for an epic eruption. For weeks, Bitcoin has been consolidating between $90,000 and $100,000, holding its breath before the next legendary surge. Lavish sees this phase as nothing more than a calm before the financial storm. He's doubling down on his $180,000 target by fall 2025, insisting that Bitcoin is about to obliterate expectations. Once the $100,000 resistance breaks, sell pressure vanishes, and the real bull market begins. Every indicator is flashing. Go. And the world is about to witness one of the biggest financial movements in history. Watch clips from the interview for further insights into James Lavish's conversation with Bitcoin magazine. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
So we still have this $36.5 trillion of debt we've got to deal with. And how are you going to deal with that? Well, this is where the Bitcoin Reserve Act comes in. So Senator Lummis from Wyoming, her idea is, look, why don't we buy 1 million Bitcoin over 5 years? And over time, if you look at the performance of Bitcoin and how it is retaining its value against the debasement of all other currencies, then that reserve will enable us to pay down a very large portion of the debt in the future, or back treasuries with it, which will stabilize the treasury, and that ends up stabilizing the U.S. dollar, right? Because the biggest issue that we have right now, which has been growing over the last number of years, is that we're seeing sovereigns reluctant to own treasuries, to hold treasuries. Now, everybody around the world needs dollars, right? We're on the U.S. dollar is it's the reserve currency of the world. The U.S. Treasury is the reserve asset of the world. But we made some, key mistakes in this last administration, like cutting off Russia from SWIFT and seizing their assets, including treasuries. This just signaled the world that, well, you don't want to be holding treasuries unless you're a very, very good ally of the U.S. Because they could just seize them from you. So we got to find something else to buy. So they've been buying gold. That you've seen that. A lot of them have been buying gold, and they've been buying Bitcoin. And so they know that it will hold its value over a long period of time against the dollar. So the previous thinking was, if you hold treasuries, you'll make an interest rate that'll give you at least a neutral return, if not a positive real return on that debasement, meaning the inflation is going up. You need to make more interest on your bonds to keep up with that inflation. But do we want to hold those now if they can be seized from us? That's an issue for all the BRICS countries. And so that's why you're hearing them talk about, they're not trying to, create a new currency for them. They just want to be able to get away from the treasury. That's the issue. They know that they're still going to need dollars. So that's the whole point. The Bitcoin and the strategic reserve then starts this game theory where all of these sovereigns have to, they have to consider, what if the U.S. owns 5% of the Bitcoin, total Bitcoin float, and we own none? That's a problem. So now you're seeing countries step in and start putting Bitcoin on their balance sheets because of this, because they know that this could be a big problem if we don't, if we don't own Bitcoin ourselves. There are two paths, like you just said. Cynthia Lummis, she has the Bitcoin Act, and that would be the Bitcoin Strategic Reserve that we talked about, the million Bitcoin over 5 years, 200,000 Bitcoin a year. And that would be the first. That's one that we've heard of. Also, we've heard since Trump was elected, people rumbling or talking about possibly an executive order. So what would that look like? Well, through the Gold Reserve Act of 1934, it's possible that he could use the Exchange Stabilization Fund in order to buy Bitcoin. Now, there's some differences here, though. So he did it through executive order. That executive order could be overturned by the next administration pretty quickly, I would think. So that's one thing. So it's not really as powerful, but it's quicker. You could do it overnight and start accumulating Bitcoin immediately, And so what does that look like? Well, there's $200 billion in that fund. But that's not all available for Bitcoin. There might be 40, 50 or 60 billion available, maybe as much as half of it. But you're talking about, it's still a lot of Bitcoin, $40 billion. And let's say that they pass it and Bitcoin runs. I mean, it's not going to be at 120,000, that would mean that we're probably only buying 250,000 Bitcoin instead of 1 million. But we would be buying it quickly, maybe half a million Bitcoin, but likely not. If he announced that order, that Bitcoin's going to, it's going to run pretty quickly because of what you just said. Everybody and their, sister and brother are going to be out there buying it, not just other nations. And so, you'll see a supply shock. The big thing is not so many people out there buying. It would be a lot. It would be the other half of it is people be reluctant to sell. Like if the government's gonna be out there buying, I'm not going to sell mine. So there would just be this liquidity issue. It would be a squeeze. And so, that's one path. I think it's pretty low likelihood because, you'd have to, there's some reasons for that. If he did that, he would be signaling to the world that he's worried about the US dollar, exchange stabilization. Like, we have to stabilize our currency, that's a bad signal to the world. And that might send the wrong signal on the US dollar. So that would be worrisome. And I think he's probably reluctant to do that, even if it is something he could do. Cause he doesn't want to be, Trump really cares about his legacy, about how he's seen. He wants the market to be at all-time highs.
As global currencies continue to lose value, Bitcoin has proven its strength, holding firm against inflation and economic instability. This has sparked discussions about using Bitcoin as a modern reserve asset, similar to gold. Historical precedents like the Gold Reserve Act of 1934 show that financial systems can be restructured to adapt to economic crises, and some believe Bitcoin could be the next strategic move. An even more aggressive proposal suggests using an executive order to accumulate Bitcoin, leveraging the Exchange Stabilization Fund, which holds $40 to $60 billion, to make large-scale purchases. If implemented, this could completely reshape global finance, positioning the U.S. as a leader in Bitcoin adoption. With governments and institutions increasingly eyeing Bitcoin, this proposal raises a critical question. Is this the start of a financial revolution, or an unprecedented gamble with the U.S. economy? Let's go back to the interview and watch more clips to gain insights from James Lavish.
The Bitcoin Opportunity Fund is an investment vehicle. It's like a hedge fund that invests in the Bitcoin space, and we focus on later stage companies. We can invest in both public and private companies, and we've done both. And we focus on companies that are revenue generating. So it's kind of like we're looking for real companies with real returns. Real companies with real revenue that produce real returns. And so we will do some early stage stuff, but it's a smaller portion of the portfolio. And so that's our focus. And the co-managing partner, David Foley, and I are the ones who are running it day to day. And, when we launched this fund, Alan, it was at the depths of negative sentiment in this space. We just had FTX and Sam Bankman-Fried and Celsius all collapse and fraud, and it was just and Bitcoin had collapsed all the way down to under 20,000. And we were out there trying to raise this fund and explain to people this tremendous opportunity. Meanwhile, while we're doing that, we had the last administration who was so antagonistic on the space, refused to give clear legislation or clear regulation on it, and was attacking the space through something called Choke Point 2.0. We even had investors trying to wire us money, and the wires were canceled or they were returned, they were refused, they were debanked. It was pretty ugly. It was a pretty ugly moment. But we did end up cobbling together enough money, enough investors to say this is worth it for everybody. Let's go forward. Let's do this. And so since that time, we've doubled the assets. We've returned over 80% net to them in just over a year, and we're really pleased. And so now you flash forward to today. Bitcoin's hovering around 100,000. It's peaked over it before. And the conversations are completely different. It's completely different. So before, we couldn't really get any institutions or any family offices to really consider it. Now we've got family offices coming to us and saying, hey, we want to enter this space. We know we need to own Bitcoin. We own a little bit of that, or we're going to buy a little bit of that, or we've owned it, but we want more exposure into this space. And you guys invest like we do traditionally. We understand you guys have been in this space. You and David have been doing this for almost 30 years each. And you are looking at the space kind of like we do and looking to get us a better risk-adjusted return than just investing in Bitcoin alone. And that's the whole point. And so the conversations have been completely different and super encouraging. And so because of that, because we've had so many people come to us, we've decided to launch a second fund, and it'll invest just like the first fund. And they'll invest pro rata, pari passu on everything. And so, according to the assets, and we've just launched it, and we're starting to take investors now. But like I said, we're focused on getting real returns for our investors. And so if you liquidate our portfolio, you get what's in your statement. We don't mark our privates up. That's a big difference between us and the VCs. We don't have any reason to mark our privates up right now. So we're leaving them at cost. And so, but that's a little bit of a distinction. What we see is a ton of opportunity in the space. We're super excited about how many opportunities we have, and exactly what you just said. We see institutions coming in and wanting to hold Bitcoin, but they're wanting to hold MicroStrategy. They're looking for ways to augment their returns. And they know now, looking back on the returns of the past, decade, if you added Bitcoin to your portfolio of other investments, it would raise your Sharpe ratio undoubtedly, and which means it would raise your risk-adjusted return to your overall portfolio. Your returns would be higher, and your volatility would go up a lower amount, meaning that your risk-adjusted return would be better. So even if your volatility goes up a little bit, which is not really that much, if you have a reasonable percentage allocation to it, then your risk-adjusted returns are better, and that's a really big focal point for institutions. And now we're seeing institutions come into the space. If you look at IBIT, or if you look at the ETFs, not just IBIT, but Fidelity and Bitwise and the other ones, you've got these massive institutions coming in that you're seeing. Some of the largest holders of these ETFs are like Citadel, D.E. Shaw, Schoenfeld, Tudor. You've got State of Wisconsin's one of the largest one. Morgan Stanley's very large one. You're seeing banks come in and holding them. You're seeing banks come in and buy MicroStrategy. You're seeing massive funds that people don't even know of. Like one of the largest holders of all the ETFs is a firm. It's a hedge fund called HBK. Harlan Cornevest's old firm. He's no longer there. It's now being run by the managing partner is Jamil Akhtar. He's a colleague of mine from the Fort Worth Dallas Fort Worth days. But they're a massive holder of this. Nobody would know who they are, but they have over $20 billion of assets, and they're buying Bitcoin because they know that it will be a strong diversification in their portfolio.
The Bitcoin Opportunity Fund is doing what few thought possible. It's thriving in chaos. Launched at a time when Celsius and FTX crumbled, regulatory pressure intensified, and the crypto market was on edge, this fund didn't just survive, it doubled its assets and delivered a staggering 80% return in under a year. For years, Bitcoin was dismissed as a speculative bubble. But now, Wall Street is making its move. Major hedge funds, private offices, and institutional powerhouses are flooding into Bitcoin, proving what Michael Saylor has been preaching. Bitcoin is not an experiment, it's a revolution. The game changed when Bitcoin ETFs exploded, bringing in financial titans like Morgan Stanley, D.E. Shaw, and Citadel. These firms aren't here for quick trades, they're positioning a long-term Bitcoin takeover. What happens when trillions of institutional dollars start pouring in? That's the billion-dollar question. But while institutions stack sats, chaos is raging elsewhere. The biggest crypto heist in history just went down. $1.4 billion in Ethereum was stolen from Bybit. That's more than double the infamous Ronin network hack. Ethereum's price tanked 4%, but Bybit's founder, Ben Zhou, reassured investors, "Funds are backed. We will recover." With $20 billion in reserves, Bybit may be able to absorb the hit. But what does this mean for crypto security? Bitcoin is at a crossroads. Will it dominate institutional finance, or are we witnessing the next great bubble before an even bigger explosion? One thing is certain, the next few months will be legendary. Buckle up, because this ride is just getting started. Thanks for watching. Please drop your thoughts in the comments below, subscribe to this channel, share this video, and hit your thumbs on the like button. See you in our video.